Well, welcome everyone. We're very excited to bring you this presentation today on the credit union movement, the role of community development credit unions, and how these member-owned financial co-ops build resilient local economies and communities. Next slide, Urban. My name is Charlie Michael. I'm the Education Outreach Coordinator here at National Farmers Union. I'm joined today by my colleague, Emma Lindberg, who's the Senior Director of Education and Programming at NFU, and we will be your moderators today. We're pleased to welcome back once again Urban Crowell, Executive Director of the Neighboring Food Co-op Association and New England Farmers Union Board Member, as well as our special guest, Carla Decker, who's President and CEO of the DC Credit Union and Chair of the Board of Directors of NCBA CLUSA. If you aren't familiar with National Farmers Union, I know we have a lot of new folks, especially from the credit union space, tuning in today. We're a grassroots organization comprised of more than 200,000 family farmers and ranchers. Our mission is to advocate for family farmers, ranchers, and rural communities through education, legislation, and cooperation. In particular, we empower our members and partner organizations to provide leadership in cooperative enterprises, education, and cross-sector collaboration with consumer co-ops, worker co-ops, and credit unions. So this webinar is very much part of those efforts. We have a rich history in the cooperative space that dates all the way back to 1903 when we formed our first marketing co-op, up through our support for the Capper-Volstead Act of 1922 and our launching of Central Exchange, now known as CHS, in 1931. And we continue to advocate for legislation that's geared towards protecting the democratic nature of cooperatives and their unique structure as member-owned and controlled enterprises. You can visit our website, nfu.org, to learn more about what we do and how you can get involved. That's all from me. Urban and Carla, take it away.
But for today's session, I'm particularly excited to have Carla join us and keep me in check and correct me when I say something wrong or clarify something that I've said as we work to tell the story of credit unions and how the movement has grown and developed and how it's relevant today. I've had the pleasure of working with Carla on the board of NCBA CLUSA, where she's the current chair, and her experience at DC Federal Credit Union and with community development credit unions I think is going to add a lot to this dialogue. So thank you for joining us, Carla.
Thank you, Arvin. And certainly thank you to NFU, to my fellow NCBA CLUSA board member, Emma Lindberg, to Charlie for all of the support, and obviously to all of the participants who are interested and intrigued about credit unions and the role that they play within the cooperative movement to build more inclusive economies. So thanks, everyone.
So what is a credit union? In summary, a credit union is a nonprofit cooperative, whereas members in an agricultural co-op might be producers. The members in a credit union are the customers or account holders. So they're the people who use the business to meet financial needs and goals, savings and checking accounts, loans, retirement services, any of those services you might receive from a conventional bank. What's different about a credit union is access to membership is linked to being part of a field of membership. So that might be where you live, where you work, membership in a certain social or economic group. And then these members pool capital together to provide one another with financial services. Just looking around the web a little bit, I found this credit union, Farmers Credit Union from Kansas, which was founded in 1953. Actually in an old farmers co-op building, which is interesting. It's also interesting because most credit unions are much more professionalized now that Carla can attest to, but this appears to be a co-op that's still very much largely run by volunteers, which is how most of our co-ops, our credit unions got started. So how does a credit union work? I'm going to completely oversimplify this. And again, Carla can hold me in check here, but as with other co-ops, members pool their resources, and it's not just financial resources they're pooling. In a sense, they're pooling their economic activity, the things they buy, sell, use for shared benefit. To oversimplify it a little bit, members deposit their money in their co-op in the form of savings and checking accounts, and then other members take out loans to meet their needs, improve homes, buy a car, grow their business, etc. In contrast to most other co-ops, most credit unions don't distribute surplus income directly to members. They more often invest it in growing the credit union, improving services, providing lower costs or higher dividends on savings to members, and of course to provide jobs and support community programs. What did I get wrong there?
Nothing. I would only add, just as a reminder, credit unions are regulated financial institutions. And as such, we also have capitalization requirements. So when you think about the redistribution to members, one of the obviously retained earnings is what builds the capital of a credit union. Again, that capital needs to be at a certain level. And then the only other thing that I would point out is, you have members who are savers and borrowers. And as you can imagine, you typically don't have a saver and a borrower within the same individual. And so you do need a diversity of people, diversity of life stages to ensure that you find that good balance between those savers who are bringing in their capital and investing their capital into the cooperative, and those borrowers who are actually going to be able to use that capital to fund their own dreams or their own economic activity. So
that's a great point. I think we were having a discussion about this earlier about sometimes credit unions are thought of as only serving the unbankable, right? Only serving folks who don't have a lot of resources. And really it takes a diversity of membership, sharing those resources together to really make it work well. Is there any difference in anything we're talking about between state chartered credit unions and federal, or is that just a level of government they are chartered at?
Yeah, it's a level of government at which they are chartered. How the savings are insured can vary in the state charters. So the state charters can either use the federal agency insurer, which is the National Credit Union Administration, to insure members' deposits, or they can go elsewhere to obtain other private insurance for those deposits. Beyond that, there are other benefits that either one of the two charters can allow for credit unions to do specific things, whether it's field of membership or not. But there's a lot of parity between the federal and the state charter. Maybe I'm, again, just oversimplifying this, but good to know that there are two different types of credit unions.
Yeah, great. So we also want to talk a little bit about how this is different from a bank. As a co-op, a credit union's primary purpose is to serve the needs of members, the people and businesses in the community, whereas a bank's primary goal is to maximize return on capital for shareholders. Certainly from my point of view, that focus on the needs of members rather than maximizing profit is going to influence the credit union's decisions and behavior in a way that is designed to meet member needs more effectively. But would you add anything to that in that core sort of difference?
No, I think that's a great diagram that really does depict the focus. Obviously is so different as it relates to ownership, but also in the decision making and the ability of credit unions to be responsive to member needs, by extension to community needs, in a way that, for instance, a bank model just doesn't allow for.
That's an excellent point. It also reminds me, the principle of one member, one vote. So no matter how much capital you have in the credit union, you have one vote. Whereas in a bank, the more capital you're building up, the more influence and control you're having. So it's almost designed to concentrate influence, whereas the credit union is designed to spread influence out among its members. Another thing that we talked about in terms of why people are looking at credit unions in recent years is their resilience and stability. And there were a couple studies that came out during the Great Recession and the economic crisis that followed, showing that credit unions were much more stable than conventional banks and didn't require government bailouts. And I wonder if you want to touch on any of this. We had a little bit of a conversation about why we thought that was.
Yes. So to start with, leading up to the recession, credit unions were not engaged in subprime mortgage lending. And obviously those mortgages that were a lot more risky because lenders were not requiring documentation, or lenders were literally providing mortgages that went even above the sale price or the value of a home. 110% loan to value was something that some of these financial institutions were engaged in. Credit unions were not doing that. They were not engaged in subprime mortgage lending. And the reason for that is, again, it goes back to, that difference in ownership and in focus. Obviously, a subprime loan or lending to a borrower who doesn't have the capacity to keep ownership in an asset for a long term is not in the best interest of the member, and by extension, it's not in the best interest of the credit union. And therefore, you also have that difference that is becomes very palpable in this particular example.
Yeah, great. So, where did the credit union model come from? As I've been sort of talking about in the series, as with the development of other cooperative forms, I think it's important to note that credit union organizers didn't create the model out of nothing, right? They were building on many and diverse traditions of mutual aid that are familiar in cultures around the world: indigenous landholding structures, models for mutual aid and common ownership, collective agricultural traditions, many of us who are in rural America are familiar with, and certainly informal lending circles and other models for resource sharing. And we talked a little bit about some of your experience of Latin American credit unions, and also the strength of credit unions in African countries, and the ways that they've been able to build on sort of traditional models of resource sharing. And I wonder if you want to share any of that from the Latin American experience.
Yes, so in Latin America, we still have informal savings circles. You can call them lending circles, just in the way in which they operate. And in many countries, credit unions look at those informal practices to then leverage those, from a cultural perspective, from a familiarity perspective, to then build programs around them. And so here in Washington, D.C., actually working with some immigrant groups, we have been thinking about how do we leverage this experience of participating in informal lending circles. How might we, for instance, do group lending or solidarity lending in a way that enables more people to be empowered? And these circles, in many instances, are individuals who are either sharing in a business, maybe even as a worker co-op, or individuals within the same family that are really trying to leverage the resources in a very micro sense.
Yeah. And so as with, again, with other cooperative structures, with the growth of the Industrial Revolution, the rise of capitalism in the 1800s, there were many parallel experiments in formal cooperative enterprise as a tool, as you sort of described, for building on models of mutual aid and community development, to enable communities to be able to, I guess I want to say, defend themselves from the changes going on around them in the economy, but also having more agency in those economies, being able to participate in those economies in a way that they had more control over. And, so much like our own times, there was a dramatic shift of wealth in the 1800s, a concentration of economic and political control, and along with that, job, food, and health insecurity for working people. And then as these impacts of globalization were felt more around the world, they disrupted traditional social structures and models for resource sharing. And the co-op movement likewise became international, with different models and structures being adopted and adapted by local communities through social movements, the exchange of ideas and strategies, and sometimes even government support. And generally, in the case of the credit union movement, German activists are credited with organizing these first formal, successful financial cooperatives. And Franz Schulze-Delitzsch, who was a member of the Prussian National Parliament in the 1800s, was in that role in government part of an inquiry into the conditions of urban laborers and artisans that were being impacted by the changes that we're talking about. And in that process, he became convinced that access to credit was the central problem. As workers and small business people were unable to access financial services from these growing shareholder-owned banks that were more oriented toward industrialization. And so he'd become familiar with other co-op models, particularly in England, and is credited with organizing a successful cooperative lending system focused on serving urban communities that had limited access to affordable credit. And then around the same time, Friedrich Raiffeisen was experimenting with a similar self-help approach to meet the needs of family farmers in rural communities, also in Germany. And during the 1840s, which became known as the Hungry 40s, there were food shortages, high prices, economic depression, unemployment, and extreme poverty in the countryside. And his first approach was actually charitable models, trying to find ways to provide poor and marginalized folks with food and other resources. But he became convinced that there was a connection between poverty and this dependence. And to address the challenge, he also turned to the cooperative model as a structure focused on self-help, self-governance, and self-responsibility to enable people to achieve independence from charity, government support, and loan sharks. And in 1862, he worked with farmers to establish a cooperative loan society, which led to the development of the Raiffeisen and Volksbanks, which continue to operate in Germany and are actually a large part of the financial sector in Germany. And as with other cooperative models, credit unions expanded quickly and basically followed the impacts of industrialization and capitalism to other parts of the world, and came to North America largely through the influence of Alphonse Desjardins, who was a journalist in Canada and is credited with helping to establish the first credit union or People's Bank in Quebec in 1901 after learning about the debt that working people were experiencing. And this led pretty quickly to the establishment of the first credit union law in North America in 1906. And today, the Desjardins Group is the largest federation of credit unions in North America, with almost 300 credit unions, 7 million members, and over 47,000 employees. So as with many of these sort of experiments, the results of that sort of collective effort to pool financial resources is still with us in many parts of the world. And soon after a personal visit by Desjardins to Manchester, New Hampshire, the first credit union in the United States was established by French-speaking immigrants in 1908. And that credit union is also still in operation. It's called St. Mary's Bank. And this is the original house that the credit union operated out of and is now a museum for the US credit union movement. Many people will also be familiar with Edward Filene. It's very hard to talk about the growth of the credit union movement in the US without talking about Filene, who was a businessman and philanthropist from Salem, Massachusetts. He was also a very progressive employer. He instituted a profit-sharing program for his employees, a minimum wage for women, a 40-hour work week, health clinics, paid vacations, and he had even donated about $1 million to the development of a network of retail co-ops in the US. But it was really credit unions that caught his attention after a visit to rural people's banks in India. And then he was instrumental in the passage of the Massachusetts Credit Union Act, which was the blueprint basically for the state statutes, and then the Federal Credit Union Act in 1934. And he essentially funded the Credit Union National Extension Bureau. Now, it's of course very important to recognize the contributions of some of these key leaders, but we could also do multiple presentations on just countless grassroots activists, organizations, and members that have grown the credit union movement and made it such a powerful tool for farmers in rural America. Also working people and labor unions. A number of the credit unions in my area were actually founded by unions directly coming out of union organizing. But they've also been really important for marginalized communities that have used the model to meet their shared needs. and improve their lives. For example, in my own area, one of our larger credit unions was organized by the workers at our state university, another one by a telephone workers union, and then a third by Polish Americans who couldn't get banking services from mainstream banks. So even in the little area that I live in, there's almost the entire range of credit unions that have formed. And of course, in the US South, credit unions were crucial to economic empowerment among African Americans and remain part of the organizing of the Federation of Southern Cooperatives, and more recently, the African American Credit Union Coalition. So that it's hard to do a presentation like this because there's so much we could be talking about, but at least wanted to touch on some of the many ways that credit unions have been so important to this country. I thought you might want to talk a little bit also about credit unions and Principle 6, the principle of federation and resource sharing, not just within credit unions, but across the system.
Yes, and so as we think about credit unions, there is a whole ecosystem around credit unions and different layers of entities that result in how credit unions cooperate with one another. And so this diagram here is called the credit union onion among some development educator folks within the credit union system, and what it tries to depict is really just the various layers, associational layers, partnership layers that form just this credit union framework. Everyone from the member, the association of members, or the cooperation of members to form a credit union, and so forth, all the way up to forming the global apex association for credit unions, which is the World Council of Credit Unions. And what's interesting in terms of this Principle 6 and how it operates in credit unions is that you have with this visual a representation of the fact that at the end of the day, the members at the heart of the business, the focus, the ownership, but it's also at the heart of the governance. So no matter how far out you go within this credit union ecosystem, the member actually has an opportunity in a role in leading and controlling that organization, so that a member of a credit union obviously can serve on the board, for instance, of the World Council of Credit Unions. Likewise, you can think about just from a financial perspective, from the member all the way to the outer layer, you have an investment that is taking place in order to get those resources in place and make sure that those resources exist. At the same time, each one of those layers produces a return, and that return ultimately reaches down to the member again, whether it is by the service that that entity or that player is, that stakeholder is providing, or because of literally a dividend return.
And of course, NCBA, CLUS has been working with CUNA and other organizations as part of the effort to sort of communicate this shared impact. Did you want to talk a little bit about this, or want me to take this on?
Sure, go ahead.
Okay. Well, for example, this was just a little graphic that NCBA put together in collaboration with CUNA, just trying to communicate some of the different ways, small and large, that credit unions deliver that benefit back down to individual members. For example, ATM fees are a real drag. They're also a major industry. And credit unions, through this collaboration, offer 30,000 ATMs nationwide that don't charge any surcharges. So if you're a member of one credit union, you can use the ATM of another credit union with no charge. They also charge lower interest rates on services that really do matter for working people, like used car loans. I believe the average for credit unions was 3.6 compared to over 5 for banks. They also employ women CEOs at a rate, I would say an astonishing rate of 10 times higher than conventional banks. In fact, more than half of credit union CEOs are women. And at a time when small businesses really needed capital, credit unions have doubled their loans to small businesses. Is there anything you would add to that? I mean, I think this is a helpful graphic, but.
It's a really helpful graphic. And I think, it goes, not to add to what's on the graphic, but just to comment on the fact that the work that NCBA CLUSA does is in creating that closeness between sectors and really enabling professionals from different sectors to better appreciate what other sectors of the cooperative movement do and how they can also help to impact not only consumers but one another.
Yep. Yeah, and also on an international level. So for the World Council of Credit Unions, quantifying that impact of 86,000 credit unions operating globally, 118 countries, 6 continents, 290 million members. And then that gives you an opportunity to think about how does this sector overlap and interweave with the other cooperative sectors? What are the opportunities we have for stronger collaboration that can grow the co-op movement as a whole? And I think, that's a little bit of where we wanted to go with the last part of our presentation, is to focus a little on some of the areas of opportunity and experimentation we've seen in credit unions today. As in other times of economics, instability and change, the model's being recognized again for its role in helping to rebuild communities, particularly as we think about building back from the pandemic, and trying to find ways to build back in a way that's more inclusive, resilient, and sustainable. Certainly in my region, many organizations have been exploring how co-ops and credit unions could work together more closely on cooperative development and cross-sector awareness. For example, many of the member co-ops in the neighboring Food Co-op Association include their individual members in the field of membership of local credit unions. So that's a very tangible way to do that kind of collaboration. But we also work closely with credit unions in the region to raise awareness of that shared identity and commitment to our members. But for this audience, I think we were thinking it'd be most useful to focus on a few areas of innovation in support of local food systems and community development. And so, we did a little bit of thinking and looking around. There's been a lot of interesting experimentation in using the credit union model specifically to support small producers at a time of consolidation in the food system and shrinking financial services for rural communities. One example, again, that we have in our region, we have a local credit union that offers 0% interest loans on the purchase of CSA, community supported agriculture shares. Now that's a small example, but it's one of those ways that credit unions are trying to innovate and support their local communities more strongly. Another interesting model is this Maine Harvest Federal Credit Union, which is a fairly new credit union and is focused on providing financing for small farmers and producers in Maine. And this effort grew out of 2 initiatives starting at around 2011 that were focused on the financing challenges faced by producers across the Northeast. But they began to focus on opportunities in Maine, where there are about 7,600 farms that produce $3.8 billion in sales annually and employ about 24,000 individuals statewide. So a pretty important sector for the state of Maine. The other thing that's interesting is the agricultural sector is one of the largest ones that's bringing younger people into the state. So in contrast to many parts of our country, 40% of the farmers in Maine are aged 34 or younger. So these organizers started doing outreach both to producers and people in organizations with resources to test their interest in this effort. And they found a very high level of need in areas of land and equipment financing, as well as quite a few people and organizations interested in providing those financial resources. There's also a lot of interest from state government, nonprofits, the existing credit unions in the state, including the Maine Credit Union League. I think that's another interesting example of the manner in which co-ops help each other. These other credit unions did not automatically assume this effort was competition, but an opportunity for collaboration. And so in 2017, they applied for a federal charter which they received in 2019, meaning that they're under that federal system you described. So the deposits are guaranteed, they're federally insured by NCUA, correct?
That's correct.
System, yeah. So how does it work? The startup equity they sort of estimated in their business plan that they needed was 2.4 million. And they got this from 23 different donors, including 10 individuals, 9 foundations, a couple of businesses, and the main credit union league itself, as well as one government grant program. The field of membership is really interesting. It is the membership of 2 nonprofits in the state. The Maine Organic Farmers and Gardeners Association, which I happen to be a member of, and the Maine Farmland Trust. So really looking at a field of membership that is invested in and interested in retaining farmland and an active agricultural economy. So these members provide capital, or as you were describing, one set of members probably is providing the bulk of the capital through savings accounts and CDs. And then another set of the membership is using those resources for loans. They're mostly small farmers, small producers. And in this case, the credit union is that simple. That's all the service they provide. They're not doing retirement services. They're not doing checking accounts. It's just savings and then loans that go back out. One interesting example of the impact for, I would say particularly for starting farmers, is this conservation grant program, which reimburses borrowers for closing costs on the purchase or refinancing of farmland up to $3,500 per loan, which is pretty substantial. And their goal by 2025 is to make $12 million in loans into the Maine agricultural system. So that was an example of some of the innovation we wanted to share in food systems. And then I wanted to give Carla an opportunity to talk a little bit about community development credit unions and also what that looks like in her own credit union, the DC Credit Union.
Yeah, thanks, Urban. So we have already spoken about the 2 different charters, the federal and state charter that credit unions can have. There are other segments within the credit union system, and if you think about the conversation about the pioneers and the organizers of credit unions in the earlier days, it typically did relate to either unions or people who were organizing around employers or a particular type of local industry, if you will. And so at the very beginning of our history, we were very much employer-based. As time moves on, that those fields, the field of membership and the definition of that field of membership has expanded a little bit. Now we have broader fields of membership. And with that also comes the sort of like the responsibility of still maintaining a common bond amongst larger groups of people. But there's also this opportunity to sort of designate credit unions by what their focus is, what their mission is, and who they're serving. And so of the 5,176 credit unions that we have as of the first quarter of this year, 2,653 of them are actually low income designated. And you have the definitions here, so I'm not going to go over them, but obviously they are serving very much working families. 520 credit unions are minority depositories. Again, they're designated as such by the NCUA, the regulator. And amongst that group, well, not amongst the group, but another 376 are actually designated by Treasury as Community Development Financial Institutions, or CDFIs. And so it's the aggregate of all of these 3 designations that brings about these community development credit unions. And perhaps it's even the opposite. Before these designations existed, there were credit unions that were so focused on, their work was so focused on what was community as a common bond and as an interest and mission, that they would self-define as community development credit unions. And so we'll talk about those in the context of my own credit union. So
I go to next slide.
please. So I'm the CEO of DC Federal Credit Union. We were organized in 1954, and very much as you have already heard, the problem that our financial cooperative was solving was a lack of access to credit by African American local government employees. So these were employees of the Washington, DC municipality back in the 50s. They were completely underserved by the for-profit financial sector, and therefore they would fall prey to loan sharks, if you will. Unfortunately, we were not organized as lending circles or anything like that. People had a need, people needed to go someplace, and usually ended up paying very serious fees for accessing those funds. So the credit union is born. It operates as such for decades, and then the city becomes a lot more diversified. We started, getting people from all over the world coming into Washington, D.C., and it's in the 90s where there is, let's say, another intersect with what would be civil rights movements, and that is that Latinos in the district, new immigrants, would either because of literacy levels, language, or even just a culture of how they use the financial system in their own countries, they would not necessarily be banked. And they would be carrying cash around, and that became, an opportunity for crime and other sad things. And so the credit union being led and owned by basically public servants who had at their core the interest in providing a benefit to all residents of the district, to wanting to make sure that the district was a safe place and a place where people could truly benefit from, all of the opportunities that are associated with living in the nation's capital. Our members decided to expand that field of membership to take on the problems of individuals who were either underserved or underbanked by others because of immigration or because by other attribute or trait. And we became a community development credit union. Our board resolved that the interest of the credit union and the bond that connected everybody was in a commitment to advance people from a social and economic perspective. And as a result, through all of those efforts of financial inclusion, really provide development opportunities for our entire city, for the entire population. Since then, we have obtained the designations of the low-income designation, the minority depository institution designation, and the CDFI designation. And today, we are really pleased in that not only are we a stronger credit union, a larger credit union because we serve a lot more people, but that diversification of the membership has enabled us to really serve people who are employed with their own professional missions of service, folks who are from community-based organizations and are advocates of our services because they also are interested in the same mission, and the beneficiaries or the users, not the users, but the beneficiaries of the services, namely people who are underserved. And that is everybody from youth, 14 to 18-year-olds, for instance, participate in the city's workforce development program in the summer, and it is our credit union that banks them. The elderly and obviously the low income and immigrant.
Mm-hmm. That's an awesome place to wrap up our presentation. That was that was a great illustration of what the credit union model can do, where it came from, where it can go. Thank you so much. That was fantastic. We just wanted to offer a few resources and links.